Well, thanks for having me, Kelly. There are a couple of things that I did not contemplate when I downgraded the stocks late last year, as you mentioned, and I did not contemplate inflation being this tough on necessities. I also was not thinking at that time of this massive swing back into events and travel. So we've got a bifurcated economy right now where people on the lower end of the income spectrum are so challenged, they're not thinking about big tickets expenditures. And folks who have money are thinking about their next vacation, are dressing up to go to weddings again this summer. Once again, their head is outside of the home. So lots of pressures that I wasn't expecting. Also, this mess in Ukraine just distracts the consumer. Big ticket home purchases, typically the woman of the household is a big decision maker. And I think she's nervous, not feeling great, not having those stimulus checks. So I think that there's probably more downside to come in this group.
Yeah, we've seen similar commentary over at RH, especially about a multitude of factors contributing to the uncertainty. Here you have a hold on Home Depot and Lowe's right now. I would have thought, if you asked me last year, that they would have a longer tailwind from the housing boom. I mean, certainly we bought our house 4.5 years ago and spent the next couple of years doing a lot of home improvement projects. Shouldn't we expect a similar tailwind from the cohort who just bought houses and will continue to fix them up? The same demographic argument Bill Smead was just making for housing in the long run. Will that come back to the forefront at some point here?
You know, you're probably not wrong, Kelly, but I think that multiples are contracting. One thing you'll hear Home Depot and Lowe's say over and over again is that they're not as well correlated with interest rates, but their multiples sure are. So it may not be their fundamentals, but you'll see people discounting them at a higher rate than they otherwise would. We think that Home Depot was probably smart to set conservative guidance when they came into this year. And because their business is a little more pro-based, I think they do have more of a backlog to work off. So maybe you get another decent quarter. But my guess is that the future tone will not be strong, and that you'll see numbers coming in and multiples contract at the same time, which is a pretty messy setup.
And that extends your arguments out, it sounds like, for another 3 to 6 months. You have a sell rating on Wayfair, which got another big downgrade today. A similar kind of housing halo effect story. You do have a buy rating on Costco, if I'm not mistaken. So could you put in context the struggles of the housing market with what you think is going on with the consumer more broadly?
Sure. Costco and its half-price sister, BJ's Wholesale Club, are really big inflation beneficiaries, especially this pop in gas prices gets people to the pumps at Costco and BJ's. I recently did a West Coast tour, in San Diego to Seattle, and was seeing gas prices at Costco $1 below where they were at other gas stations. That means more memberships bought at Costco, more consumers trading up into higher tier memberships at Costco, and very, very, very little churn, and more people going into the store while they're there to buy, half price prime beef compared to what they would buy in a grocery store. So those warehouse clubs, big beneficiaries of inflation. Not much else in my group is.
Yeah.
So Costco, BJ is one of the few places we like.